Hello everyone, this is the pre-market report video for today 20th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, yesterday US market was on holiday, which in turn reduced the whole global trade volume including in Indian market. So the global momentum was kind of paused at the same state as last Friday. Thus, throughout yesterday, global market other than India and China just reacted to the US January month's wholesale inflation data, which we discussed in detail in the last video, and it did affected negatively on the tech and chip related stocks in both Japan and European market. Despite that, still both overall market closed on the flat note. So, other than Indian market, it's only Chinese market closed significantly positive since it's just catching up after its 1 week domestic holidays, and also Chinese this New Year's holiday spending increased 47% compared to 2023, which all helped their major index to close over 1.5% positive. Then coming to US future market, early morning Eastern time, Goldman Sachs in conjunction with their Friday's S&P 500 upgrade, they downgraded their stance in credit to underweight, which means simply they are not positive on bond market. In addition, in the same report, they also mentioned that the risk reward in stock market seems much more attractive than the bond market, since at present stock market got only the risk of Fed keeping the interest rate higher for longer period, which they expect it will overcome by the better global manufacturing sector's recovery. To some extent, this supported the tech stocks in the US future market and made it to trade marginally positive despite some negativity in European tech stocks. But please remember, last Friday after this bad wholesale inflation data, US stock market fell from near all-time record high value. So this minor upside in US future market might be just a dead cat bounce rather than the fundamentals. And thus, during the time of the video, Dow Jones was trading near flat, S&P 500 marginally up 0.09%, and Nasdaq was doing a bit better, increased 0.25%. But on the contrary, VIX increased 3% and moved near 15. Regarding oil, because of demand concerns, it dropped marginally, and at the time of this video, WTI crude trading at $78 per barrel and Brent crude trading at $83.5 per barrel. Then, as we know, there is no Indian ADR, and about GIFT Nifty at 3 AM Indian Standard Time, it closed at 22,180. Yesterday, while our market closing, the premium was 60 points, considering those the morning close indicating the flat opening. So that's all about what happened on global market yesterday. Now let's move to the Indian market related info. First, just a quick recap about yesterday's Indian market. We know despite the flat to negative global momentum, Nifty reached fresh all-time high value 22,186. But in the final hour, it trimmed some of the profit and closed below the previous all-time high value, which most of us know now. Here, this closing below the previous value is significant in the technical aspect. So please note, which we can discuss in a moment. But here, I like to highlight 3 to 4 items. 1. Yesterday it was FTSE's Global Index Indicative Review release, which is similar to the release for investors consultation, and the final review update will be released on March 1st. Now, as per indicative review, it was estimated that near 3,500 crore rupees of passive funds expect to go from HDFC Bank. Hence, that was also one of the main reason why HDFC Bank was under pressure yesterday. In addition, if required, please pause and have a look. These are the 16 Indian companies newly added to the FTSE's All World Index in their semi-annual indicative review. The change will be effective from March 15th. So this FTSE's India's weightage increase in the global index did also supported positive to the overall Indian market. Second, about ITC. There was a progress in discussion by BAT as a strategic move. They inclined to sell 4% of the ITC stock to Bank of America and Citi, which turned the stock positive. About institution, after just 1 day of buying, again yesterday FI turned as net sellers but with less volume. The net sold for approximately 750 crore rupees. However, DII net bought for approximately 450 crore rupees. As a summary, last night US future market recovered and closed positive even though whole global stock market momentum haven't, and GIFT Nifty is indicating the flat opening. Then as per stock open interest, Lupin, HDFC AMC, SBI Life Insurance, L&T, Birlasoft, Bata India and Kotak Mahindra Bank got an increase in open interest along with a negative close, which indicates the short build-up. On the other hand, Biocon, Bajaj Auto, Metropolis Healthcare, Dixon Technologies, Bosch India, GNFC and Laurus Labs got an increase in open interest with a positive price close, indicating the long build-up. Regarding the things to look out, first, before our market opening around 7:30 am, it's Chinese interest rate decision. At present, the expectation is to pause it at 3.45%. By chance, if they reduced it any basis point, then that will be considered positive, especially for the metal stocks. Then during our market hours at 12:30 am, there is a schedule for Germany and France car registration data, because last week Germany officially enters into the recession. Any increase can act as positive for European stocks. So these are some of the important items we need to keep an eye out today. Coming to technical, as we discussed earlier, Nifty opened 60 points gap up and hit a new high of 22,187 and closed positive for the 5th consecutive session, despite mixed global cues. Thus, on the daily chart, it formed a small green candle with medium upper and lower shadow. This candle's medium shadows on either side indicating indecision among buyers and sellers, and both of them trying to defend their position. So that's okay, but as we discussed earlier, Nifty closed below the previous all-time high value. By chance, if it closed above 22,125 means, then we can say technically the more probable scenario for Nifty is to expect to move higher towards 22,400 to 22,500 levels, but that haven't happened. Nifty was unable to decisively close above the resistance zone. That's the first indication of consolidation. Second, in addition, on the hourly charts, Nifty had a negative crossover along with a divergence. Technically, both this more probably can lead to some correction towards the support zone 21,970 to 21,930, which is the gap area formed on February 16th. But any chance if Nifty managed to sustain above 22,150, and because now RSI had an upward slope at 62, which can provide the sideways bullish momentum, and then there is a potential for an upward movement towards 22,300 in the short run. Overall, Nifty is trading at a crucial juncture and can turn volatile considering that both buyers and sellers trying to defend their respective boundaries. In case of Bank Nifty, it opened 170 points gap up, and similar to Nifty, it also increased for the 5th straight session. Thus, on the daily chart, it formed a doji candlestick pattern chart, which also again indicating indecisiveness among buyers and sellers. Despite this, the overall undertone on Bank Nifty still on the positive side. The immediate resistance on the upside is at 46,700, and a closing above this level is likely to trigger further short covering moves towards the 48,000 mark. On the downside, the immediate support is at 46,000, which coincides with the highest open interest on the put side, indicating a crucial level for potential price movement. Regarding options open interest, the maximum call option open interest was at 23,000 strike, followed by 22,600 strike and 22,100 strike, with new call option rating at 22,200 strike, 23,300 and then 23,000 strike. Thus, from the options data, it indicates 22,200 to 22,300 will be the immediate resistance. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 21,000 and 21,900, with new put option rating at 22,100 strike and then 22,000 strike. Hence, the immediate support will be at 22,000 and then 21,900. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any decision based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.